Wow, wow, wow. Fire like with me.
And it's Tim. So the theme for tonight is about partial recovery and then collapse. Now, things move quickly these days, and I'm amazed how quickly things have moved over the past couple of days. I'm speaking on Thursday. Only on Tuesday was the market just sky high. You know, as high as it's been for months. It only took 2 days to rip us down in the quadruple digits of Dow points. So things are moving quickly. So I don't know if Friday we're going to wake up to a crash, but my hope, and goodness knows that the market bases everything on what I hope and wish for, my hope is that we get some kind of small rally within this to, I don't know, 1150, 1160 maybe, and then start falling down hard again. This range here is about 100 S&P points. We're at the lower end of it, but we are threatening to break it. If we break this, the 1050, which has put the sparkle in my eye for a long time, will be almost a certainty. We may get lower than that. Who knows, 1030 or so. So even now, as I'm speaking, the ES is up 0.5%. It's up 5.5 points. I'm talking about 90 minutes after the close on Thursday. So when you listen to this, God knows what it'll be. And interestingly enough, very interesting, it is beneath that broken trend line. That might be a barrier to it getting any higher. I don't know. If this thing struggles at 1135 and then starts falling down, look out, because that's like a gift to the bears. And we could, it sounds crazy, but even on Friday, more likely Monday, but see the 1050-ish type of drop that I've been talking about. But I'm not positioned heavily now short. I have 30 shorts, all small, and I have a few large conservative longs, commodity related, DBA, DBC. I also have a short on TLT, which is effectively kind of a bullish play. So if I wake up tomorrow and the ES is down 40 again or something, boo-hoo for me, because I'm not positioned heavily on the short side. I haven't been positioned heavily on the short side through this whole route, as you know. I've been about 30 to as high as 40% committed. But thanks to end of quarteritis that I'm afflicted with, I have not gone whole hog. Let's look at a few charts here. And again, I'm going to keep driving at this. The idea is we've fallen awfully far, awfully fast. A bit of a lift before we tumble again makes sense to me. Here's the NASDAQ composite. Got a lot of gaps going on here. So filling this gap would be a wonderful, I think, shorting opportunity. The Dow Jones Industrial Average, dollar Indu. We have fallen, as I said, about 1,000 points in a couple of days. And filling this gap would be awfully nice, getting us back around 11,100. To me, if we wake up to a good, strong ES tomorrow, if there's some kind of pep talk from Washington that lifts things, that's terrific. That's just what we need. What we don't need is more selling, because that you can't really short into prices this low, I don't think. Mid cap pushing back toward, I don't know, 8.15 would be pretty good. Let's look at Index. I'm not just looking at all the indices here. I have chosen these in advance as examples. Index, we have our giant broken trend line here. Fell hard, bounce up, beginning to fall again. Filling this gap would be nice. We want to cut below those lows from early August. Thanks to Apple, the Nasdaq's been held up quite a bit. This chart speaks to the notion of a bounce. OIX, this is the oil index. Just a perfect kiss of that trend line right there. Here again, pushing back toward this gap and then falling and cracking that line would be just what Dr. Tim ordered. Russell 2000, extremely weak, down very hard, even for the year. This is a shoulder, head, shoulder here. We'll zoom in a little closer. Oops, not that close. Hang on. Yeah, shoulder, head, shoulder, crack. Let's get this back, Russell. Let's get this back to about 666 or so. That's a nice little easy level to remember. Short the devil out of it, as it were. A little double entendre there on the fly. No extra charge. Just click another ad. S&P 500. Profoundly bearish pattern here. The chewing gum is back in style. So getting back to really no higher than 1165 or so. These are big gaps. These are big overnight gaps. But very clearly on a multi-month and even multi-year basis, I think the bear pattern's back in place. XBD, the broker-dealer index, continues to fall hard. Gap there as well. But financials were incredibly weak. I mean, they just can't seem to find any sort of base. Let's turn our attention to a few specific ETFs, back to this whole theme. OIH, I pointed out, I think yesterday, I pointed out that this broke the trend line, and that was big news, and indeed it was big news, because look, we fell another almost 7% today. Here again, getting back to around almost 120 would be a wonderful, I think, shorting opportunity. But I am long commodity items right now because I do think that push is going to take place. We got silver here. Sorry, BDI. I think getting back to around 38 or so would be a great place to get out or even get short. Different view of crude oil here, the CLX1. Okay, now, so just to wrap this up here with a few last items. Euro, it's kind of all about the euro right now. This data is still that drop of 0.9% that incorporates Thursday's activity. I think it resets at 3 p.m. But you can kind of see in your mind's eye, kind of draw a trend line down that we've been following. We're kind of at the low end of this. Getting a bit of a lift to this would, I think, provide the fodder needed to lift commodities and lift equities a bit, and provide us that. I don't think it'll, I mean, we already got, this was the golden opportunity to short right there. I mean, that was the retrace. And so if it does push higher, I can't see it really going much higher than around this level or so. But as I pointed out, this pattern and this pattern are the same, except this one's bigger. And so I think the drop here could take us down very... ESC1. Take another last look at this. So earlier we looked at the minute bar. This is on a daily basis. We can see here more clearly how we are just clinging for dear life to that broken trend line. So we are, but again, shoulder, head, shoulder, crack. And so this, look, if a month from now we look back and we actually did get to 1030 or 1050, the past 2 days defined it. This is what it's all about. And lastly, actually not lastly, penultimately, in Q, this one actually just barely pushed beneath that support, kind of cracking through right there, threatening to break. This has clearly been a lot stronger. I mean, look how much sharper the ascent is on NQ as opposed to ES. And very last one, I am short this. I did a few intraday shorts on this to little good effect. But the bonds have been beyond on fire. This This looks like the internet back in late 1999. I mean, this is crazy. Precious metals those are so last summer. I mean, no, this summer. I mean, I'm joking here, but the whole safe haven thing of precious metals clearly is dead. Silver has been, down the toilet, 25%. Gold has lost hundreds of dollars in the past week or so. Bonds keep going. Bonds just keep going. And in fact, I never thought I'd see it, but we're actually approaching this fan line up here. So if we do crash and get up to this level, we can use the resize graph feature in profit charts to check this out. That is a pretty nice upper limit. I mean, look how clean this is. If we got up to round about just below 128, extremely clean on that. But yeah, this gives you some perspective just how far this has gone. So I'm short this. This is in fact my biggest short. But once again, I'm only 30% committed, 70% cash, kind of a 40-60 bull bear split. Not really committed strongly in any direction. What I intend to do is get out of the longs that I have, provided we do get that little bounce I talked about. I will mention in closing, since I keep saying in closing, that I do have 5 individual charts, which I will kindly share with you now. This is FII, this is LHO, LUV. You can see these are all clearly bounce plays, RRD, and SFG. So all these have fallen very hard, very fast, and these are just bounce plays, and there's that. So I am done, and I will leave you with best wishes for a good final trading day of the week. Bonsoir.
I mean,